Good evening, ladies and gentlemen. This is Christopher Aaron. I do thank you for tuning in. We are going to focus on the trends and the targets that are setting up for gold specifically in this video. And I want to look at this topic of what may possibly cause gold to fail here over the short run. Gold is coming into an important support zone that we're looking at, and there are some patterns that are shaping up in other markets outside of the precious metals that have alerted me that this would be the potential. In other words, if we see certain things happening in other markets that impact gold, this may be the reason why gold would fail at this support level that I'm watching. And I want to show you why. Now, I will give you the probabilities for this as we go along. I'm not saying that gold will be failing yet, but this is what would be the cause of it when we get to that point. So let us take a look as we focus on the near-term action first of gold and silver. And we are looking at the continued decline in the price of gold. We were talking about this last week. A lot of action happening over the last week. We saw the rise after the Fed meeting last week in the price of gold continuing into Thursday. And then on Friday of last week, after the Chinese and U.S. trade war outburst with tariffs, we saw a massive decline in the entire commodity sector, which pulled down gold and silver with it. So it's amazing how these fundamentals sort of pop into place to fulfill the technical targets that we were looking at. Now, premium subscribers know that when we saw that breakdown 4 or 5 weeks ago below 1300, that breakdown, we had a target that was given based on that of 1235, and gold had just been hovering in the upper 1200s, trying to get back above 1300 for several weeks. And even though it was trying, it was unable to do so, and we held on to that target of 1235. And sure enough, it looks like we are getting into the range of that target actually being achieved. And I'm going to put that in perspective in a moment here. So we're seeing the liquidation of these long holders in the gold market who had purchased during the first quarter, during that consolidation when gold was above 1300. And we're seeing them liquidate now that this decline is gaining momentum. Now, once again, interestingly, here we are talking about the silver market holding. So once again, you can see that silver did not decline today relative to yesterday, whereas gold did. And we're monitoring this on the gold to silver ratio pretty much on a weekly or a bi-weekly basis right now, because that topping out in the gold to silver ratio is really an important signal for a low to be setting up concurrently. It doesn't have to set up the same day or the same week, but we're talking about in the time frame of a couple months of an important low should be setting up concurrent with a high in the gold to silver ratio. So mildly encouraging still to see the price of silver holding its own here in the low 16s as gold made that new low. Now let's bring up the primary gold chart, and we have the color key here. So once again, we were talking about this consolidation here during the first and the second quarter. That broke back down here below 1300, and we could see it was unable to get back above that broken support level, and now we're seeing the continued liquidation. So when we saw that breakdown here in May, I came up with the target. This was a calculated target based on the amplitude of this consolidation right here, and the target was given right there at 1235. Now, this is very important to understand what is about to be shaping up here in the gold market. This confluence, this battle of trends that we are about to see, this could happen later this week or early next week, certainly anytime over the next month. We're going to see a battle of trends, of buyers and sellers here. We're going to see the last remaining longs liquidating from this consolidation as gold approaches this target. And we are also going to see momentum and trend buyers stepping in here on this primary 2015 to 2018 rising support. Now, the target, 1235, would actually take gold into a range that would be slightly lower than this rising support. And I've been making a very big deal about this for months, that gold must maintain this rising support to stay in a structure. We're talking about a trend structure, which would be indicative of higher prices to come in 2019 and 2020. So we must see this rising support hold here, yet the target actually would take us below that rising support. So this is what I'm saying. We have a battle. We have a divergent set of targets and support levels here that will be going to battle and playing out. And one of these groups will win out. And this will have a tremendous impact on what is going to happen to gold, depending on how this resolution occurs here over the next several weeks. So let's look at a leading signal here. We are switching over and we're looking at the top. We're looking at the GDX gold miners. We've been updating this chart every week or so. And at the bottom, we are looking at the price of gold using the GLD paper fund as a proxy. And just notice this divergence here is very clear to see. We're seeing these higher and higher lows come in the gold miners, and we're seeing gold making new lows. Very clear to see here, especially with this breakdown in May and now another breakdown happening in June. Gold miners holding well above the relative level here. So we're talking about the senior gold miners, and there is some silver exposure in this GDX fund, but something is happening here with these miners, and this is now not just a 2 or 3 day signal. This is now a 5-month divergence that is setting up here. What are these miners pricing in? Why are they not falling with the price of gold on the same relative level? There must be a reason why some of the mining sector investors are not selling at this time with the lower price of gold. And what is that reason? If you ask me, it's because they are paying attention to this rising support line here, and they are saying, in our best estimation, this is going to hold. So what I would suspect is that there is still going to be some more weakness coming in here to the price of gold over the next 1 or 2 or 3 weeks. We'll see how long this wants to take to play out. We have the lower target. What I would suspect is that this lower trend line is going to hold, and that gold will begin a process of rounding out. That is my suspicion at that point, but let's not call things until we see this test occur. Let us have the charts guide us, and if anything were to go wrong, if gold were to fail here, we are certainly going to have to adjust our outlook for not only gold, but silver and the miners over the next several years. This will be a radical change in perspective if we begin to see a breakdown below this support level. What would cause that? What can we think fundamentally speaking? We don't always discuss these fundamentals here because we're just look at ultimately, in my mind, what matters. What matters most than the price? What possibly matters more than that? In my opinion, nothing. Ultimately, we care about the price that we have to buy and sell at, plus or minus a bit of a premium for the coins or the bars or however you're choosing to do this. So we pay attention to the price, but let's take a look. For example, what could cause gold to fail? I'm not saying we will see that, but what could cause it? It is very clear that what is happening here in the overall stock market, this is the United States S&P 500 index. We are talking the 500 largest companies in the United States. And just for perspective, the United States, once again, you say, well, this is only the United States. Well, the United States makes up still at this point 52% of the entire world's stock market capitalization. So you better believe that what happens in the U.S. market is going to impact the entire world. So we are focused on the U.S. market at this point. Why? Because we had seen for the last 9 years a very clear, orderly, linear rising channel developing. Look at the clarity of this channel, staying within the boundaries of what is called a linear on the y-axis. We are referring to the rate of change, a linear rising channel, and something is happening here in the later stages of this rise that is actually, despite the fact that the stock market is overvalued, this market is actually trying, once again, after those little jitters that we saw in February and March, this market, according to the charts, according to the actual prices of the stocks, is trying to accelerate even higher. So what happens after you have a linear channel is that if this acceleration breaks out, and it looks like it's making that second major attempt now, you will then have a parabolic curve developing, and you won't even be able to see this. If this truly happens and starts accelerating here, you won't even be able to see this anymore with such clarity, because this market will become a complete mania and a complete bubble in the stock market. And we're seeing the evidence in front of our eyes that the market is trying to do this. Now, take a step back before you click off this video and say, well, Chris is a mainstream investor. He believes in the stock market moving higher and higher and higher. No, listen. What I'm saying is this is what the market is showing us. However, when we look at the fundamentals, we can see, for example, we look at dividend yields on the S&P 500, we can see that over the last couple of decades, the stock market is much closer to levels that corresponded with previous crashes. Here was the crash in the broad stock market, in the Dow Jones, for example, in 1929. The dividend yield had approached the 3% level, showing you how overvalued the stock market was. We are significantly more overvalued right now than even in 1929. So I'm telling you, on a fundamental basis, I believe the data shows that the stock market is overvalued. Yet, the famous quote by John Maynard Keynes, markets can remain irrational longer than you can remain solvent. I think this is so important to keep this in mind as we look at pieces of data such as this. We are talking about a market that is fundamentally overvalued, yet we see the sum of the market actually buying more and more and more. And if this remains irrational in the stock market and begins to round up into a parabolic curve despite the fundamentals, this is the warning that we're seeing now. So despite the fundamentals, that can happen. That's what's important to understand here. Markets can move contrary to fundamentals for longer than we all or you may remain solvent in certain situations. Bringing that back to the gold market, right? How is this going to look? So that would be the backdrop. If the stock market sucks in all the remaining capital and everyone just starts buying stocks in a bubble, we would have to be on the lookout for a scenario where gold may break this rising support level. So this is what we're watching very closely for now. We looked at those leading indicators. We looked at the miners that are saying they believe the support level is going to hold. So, in my opinion, judging from the bulk of the evidence that we have in front of us, what is shaping up here is a test of the lower trend line, and I think there may even be a short-term flush. We may even see what is called a false breakdown here over the next couple of weeks, and then the market springboards. And I believe, as a net sum, this support is going to hold. So the conflict between the lower target and the rising support, I think, will resolve favorably still for gold at this time. This is the operating thesis at this moment. And then at some point in the third or the fourth quarter, we are finally going to see this 2016 through 2018 resistance zone here, 1378 or so. We're finally going to see this exceeded. And then we will have to judge how strong that breakout is as we get into the later part of the year, which will tell us, was this the final move for the next couple of years, or is this building a very healthy base that is going to continue moving higher well into the next decade? So these are the scenarios. Just keep in mind what we are seeing in the stock market. It is irrational. Yes, it is not based on sound fundamentals. Yes, but it is happening nonetheless. And ignore what is happening at your own peril. Stay married to the fundamentals or some belief at your own peril. We have to pay attention to what the actual market is doing. So that is why I'm here. That is the focus of this channel. And I do thank you for watching. This weekend, on Monday morning, we have a very special premium monthly update going out to subscribers. It will be in the format of this video, but it will be longer, about an hour in length, usually plus or minus, and we will cover not only what is happening in gold with the latest updates, but also silver, the gold and silver mining sector, the US dollar. We will look at more depth at the actual targets in the stock market. We will look at the bond market and the broad commodities. I mentioned that commodities had sold off really negatively last Friday after the tariff wars between China had been going on. So we will look at some of the targets for the commodity index coming up, a lot more too. All of the miners that I am buying and selling here personally are included, and all the research goes to premium subscribers every week, with the longer video coming out once per month. If you are new to the precious metals, or you simply would like to discuss this with someone who does not sell the metals, please know you can reach me for individual consultations by voice or by email. I do know a dealership that I trust that does sell the metals. If you'd like to save $10 off of an order of $300 or more, there's a coupon code below. It's bullionexchanges.com, but you have to use that coupon code that you see in the description. It's just a chance to try them and see how you like the service. Their prices are pretty good, and I know them personally, so I trust them a lot. But just an offer there down below. Thank you once again for tuning in. So we're looking at this market. We're looking at the gold market really shaping up for a very important test. I cannot emphasize this enough. The test that we see here coming in as gold gets down to 1240 or 1250 or so, this is absolutely critical. So please pay attention to these charts and what is shaping up, especially if you're leveraged. If you're just stacking every month no matter what, this isn't going to impact you as much, except that you may not get the outcome that you're looking for. But this is especially important if you're engaged in some of the more leveraged forms, the miners, or if you're trading futures, or if you're on any sort of those leveraged accounts. It's very important to pay attention to this test in gold that's setting up, in my opinion, in the next 1 or 2 months. We will know the answer, how that support level is going to impact prices going forward. Thank you very much, and I will see you this time next week.